The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone, from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. Folks, we've got several patterns lined up. The first one that I've put in the Tiger Den today is the silver chart. Believe it or not, folks, this is the first clear ABCD pattern that I have found since this thing started, moving up in February. I mean, it's had some retracements, of course, but not a very clear ABCD like we have here at $17 an ounce in the silver. Went a tiny bit below that, I believe 2 or 3 cents, but that's a perfect ABCD. And Gartley said in his book, if you find an ABCD pattern in an uptrend, you're supposed to take that trade. So the risk here is very small. Below 1690, you would certainly be wrong. And so keep this in mind that this is the first one that we've seen in quite some time. The next one we're going to cover, we talked about yesterday, and that is the gold market. We put this up yesterday when it was trading a tad higher than this. And you'll notice that we did complete this pattern last night. We got down to 1361.10, I believe. I don't know where we're trading right now, but I believe that is held so far. If it breaks below that, we could easily get down to that second level, which is the longer-term 61% retracement and 1.618 expansion at 1253 if we break below that. So there's still a possibility of the 1253, but at this level, you do have a perfect ABCD. You're down about $34, a little bit more than $34 from the high. So, which is, the harmonic number in the gold is right around $34. And we are $34 down from the secondary high that we had up at the 786 retracement. So, I prefer to buy things when they're, in a retracement mode, so you don't have to risk that much. Buying breakouts has never been my forte. That's probably the understatement of the year. That gets us to the point that I wanted to cover here. And, Mark Douglas always talked about the 4 fears that we have in trading. The first one is the fear of being wrong. Everybody worries about that. You better get used to that one because you're going to be wrong a lot in this business. You're going to have to kiss a lot of frogs before you find a princess. I can promise you that. So get over the fear of being wrong. That's going to be a given. The second one is the fear of losing money. That's a fear also, but you can mitigate that by trying not to lose too much, and that's how you plan your trades so that your risk reward is heavily weighted in your favor. The fear of missing out, boy, that's a tough one because I can tell you perfectly what happened in this gold because I was very bullish gold, coming into the beginning of the year with the 3 drive to a bottom pattern that we had. We got a tremendous move from 1070 all the way up to 1244, and I thought 1244 was going to be the first correction down. I think it corrected maybe $3 off of that level before it went up to 1287, and then again it went up to 1306. So that happens. You just got to shake that off and know there's going to be another train coming down the track or another bus coming down the street where you can put your quarter in and get on and get a fresh ride, because that's it. Remember the old market adage, it's much better to be out of a market wishing you were in than in a market wishing you were out. So how many people you think that are still in Apple from 125 or 131 that were wishing they were out? I would imagine there would be quite a bit. And so we'll see how that works. And then the fourth one finally is the fear of leaving money on the table. That is an absolute that one is Mark and I used to talk about this because people have that as a fear, but that is the silliest of all three. And the reason why, leaving money on the table, think about that for a minute. The only way that you can't leave money on the table is if you sell it at the exact high tick, or get out of it at the exact high tick, or buy it at the exact low tick. That's the only time that you can, have a fear of losing, missing the leaving money on the table, and that's a fallacy also. So what you have to do, from my opinion, is you have to have a belief system that says, what I'm looking at gives me a higher probability of winning than it does losing. And the only way you can do that is to prove it to yourself. Like Jim Twentyman says, defy human nature. Do the work yourself. So if you can prove it to yourself that you're able to, have a belief system that says, yes, you can make, more money than you can lose, then, you've got something to work on, whether it's pattern recognition or whether it's a sophisticated or even simple oscillator system or a moving average system. Anything that could work for you is what you really need to do, because you're the one that has to take the responsibility for doing the trade. Now, it takes some homework to do some of this stuff, and you've got to prove it to yourself. But frankly, that's the only way you're ever going to, get around these things of what we're looking at. So that's the bottom line. I'll get off my soapbox now, but that's really what you need to really work on. Those four fears, you got to get used to those, because losing money, that's like breathing. If you lose 3 times in a row, that's actually not a bad thing. That means you're just that closer to your next winning streak. So keep that in mind, that that's something that we want to focus on here when we're at TFNN as we're looking through here. Now, the other thing that we have going on today, and we'll use our good friend Andy Hike here at the TFNN, because he's the commodity specialist that does all the great work in the softs and the grains and stuff. And we have a couple patterns lined up here, and we have a big crop report today at 10 o'clock Eastern time. So that's going to be right in the middle of the day. You're going to see some wild action. But this is the new crop corn, the December corn. And as you can see here, down on the end of April, we had the other crop report. I believe it was on the 30th, as I recall. Maybe it was the 29th, but you can see, corn dropped, 30 cents a bushel before it turned around and rallied 60 cents a bushel. So remember, these crop reports are forgotten the day after, but they do move the markets during that time. If you'll notice here on the December corn, we do have a very nice setup. You can see we had a really nice bottoming pattern forming with that 3-drive pattern. Then we had the big rally up. That rally, by the way, stopped at a 61% retracement off of the high that was made in October of last year. And now we're making this ABCD pattern to the downside, which comes in about 7 cents lower from where corn is trading right now. So 7 cents into a crop report is not a lot of cushion. So we'll cover this in just a minute. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've had a question from one of our dinners here about the stock indices. I've posted the E-mini chart from Friday when we were, looking at that 78% retracement holding where we had the ABCD pattern. But the question that he had was about gaps, and we really don't see any gaps in the stock indices when they trade on a 24-hour basis. You'll see some gaps, of course, on Sunday night occasionally, but you won't see any other gaps through here. If you do, it's only because the market was either temporarily closed for some technical reason, but you won't see any gaps on these because they do trade on a 24 hours a day, 5.5 days a week. So they'll be very, very rare. Now, that's not true with the SPX, which is the cash index, because that doesn't open until 9:30. And you will see some gaps in that. In fact, you see them all the time. But that's not really what the real market is doing. And remember, this is a very small market. When you compare this with the euro or treasury bonds or, just about any of these other big financials, you're not, it doesn't have the same open interest or volume. You have a lot of people watching it, but as far as the size of it, it's not even a fraction of what the euro or the pound or the yen, any of the major cross rates are doing. I mean, that's where the real money is. But that's why you don't see any gaps in the E-mini, is because you do have that 24-hour trading. We didn't have this until about 15 years ago, I believe, when the internet became popular in '96. And then we started seeing the overnight trading when we had Globex come in, and you'll see this. Now, we talked about this yesterday, and that we've had this big rally that's rallied 30 points off the bottom. And the 61% retracement of the high that we made back on April the 20th comes in around the 2072, 2074 level. So we're still about 12 points away from that spot. So that's what it looks like with the S&P today. It's still up on the day. Most of this rally, well, not most of it, but the bulk of the rally was due to what happened in Japan, because Japan started off after being down, I think, 10 out of the last 11 days. Japan finally had, such a bad oversold situation that the shorts, when they started to cover, they all started, to cover at once. and then there was nothing else that you could do but watch it go up, because that's what it was going to do. We've had a question here about the yen versus the dollar. This is one that we've been watching very, very closely. I'll put this weekly chart up because I focused on that over the last few weeks, but you'll notice when we got to the 106 level, that was a 20-month line going back well over 10 years. It went all the way back into 2003 on a weekly basis. That was actually a perfect 38% retracement from the low that we made way back in 2011 when our fearless leader, Tom O'Brien, coined the phrase King Dollar. And that market has gone up for 5 years. And this is only the second 38% retracement. If you'll notice that we did have another one in 2013. It pulled back quickly over about an 8-week period, and then continued on up to the 125 area. And so far, we've come off, we're 3 handles higher than the low we made at 125 and change. We've got up to 109 and change last night. So it started to turn the corner, pretty good. So that's what we're looking at here in the Japanese yen. On a programming note, boy, don't miss tomorrow's show, folks, because we have a really special guest tomorrow. Dr. Al Larson from My Electric Life is going to be our guest. He's a double PhD. He has a PhD in astrophysics, and he has a PhD in computer sciences. He's also a war hero. I believe he flew 293 missions in Vietnam as a forward observer on a Huey helicopter, which the life expectancy on those guys was very, very short. And yet he had the largest number of missions that they had recorded. So he lived a charmed life. He's also a very active trader and a super good human being. That's the best way you can describe Dr. Al. But he'll be on tomorrow, and you'll enjoy it. But he's a really smart guy and very humble. He's just as nice as can possibly be. But that book, My Electric Life, is really good. Describes about how the electronic stuff of this lunar things work, in my opinion. But Shane Smulyan has already showed us some of the things that he's shown on the lunar things, how well they work. And that's all you're trying to do, is to just get a little bit of a head start on what some of these cycles are doing. And then you match them with the patterns, sometimes that'll give you a little bit better, feeling of where we're at. So Dr. Al Larson will be our guest at 9:30 tomorrow. I was supposed to have Rich Anderson on today because of the crop report, but unfortunately he was extremely busy and was having a little bit of a travel problem, and but it's started to work out, and we should have him maybe by Friday. We'll have Rich Anderson on. Okay, we've had a question about the crude oil. I'll put this up and we'll take a look at it here. We've looked at this on the daily basis before because we had the 3 drive to a bottom pattern, back in February. Then we rallied up, and the important thing about this is you can see the AB leg on the left and you can see the CD leg on the right. That's just showing you that those moves are equal. And that's something that you'd like to see, especially when it lines up, with a 61% retracement, or for some other expansions, that we're looking at. By the way, I don't know if any of you ever listened to Jim Cramer, but occasionally I do, because yesterday he was focusing on the work of Carolyn Broden, the Fibonacci Queen, and he was showing, what Carolyn was showing, and we can do that easily here because we have done pretty much exactly the same thing. In fact, it was exactly the same thing. And he was showing the symmetry that you have in the cash index for the S&P, the fact that the BC swing was equal, the number of days from high to low on the up moves was exactly the same. And so he was referring to that, and he said that's what we call symmetry. And then he put a disclaimer in it about these are just charts and they don't really mean very much, and yet that he said they did follow him. So it was rather funny. But I tell you, I have a really hard time following him because he talks so fast. I mean, he's way over way over my head when he talks, because he talks so fast. It's just really it's really amazing. But the one thing that he did focus on was this chart that we've used many times before. It was showing a little bit different, little different type patterns, but doing exactly the same thing. Was the reverse point wave, or the expanding triangle that we have here, going back over the last 10 years or so, and that is the one that really is the important one. And as you can see on this last rally that we had, the market only rallied back, basically 60. Well, it went 70% back. The one in 2007 went 65% back, but it only stayed there for one day and then rolled over. Okay, we're going to pay a few bills. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were talking, what were we talking about at the very end there? Okay, I did want to share with you one other tidbit of information. You know, I do get some emails from you folks out there in listening land, and some of them are pretty funny. and some of them are, a little bit, how do you say it, troubling. Anyway, the person said that how can I even think about the market as being related to the planets? That's the most ridiculous thing that they had ever heard. And I know it does sound ridiculous, but if you go back and look at it and realize it's nothing more than numbers, then that's really all it is. And all I did was look at the numbers. I don't know classical astrology as far as making predictions of whether a person's a Capricorn or a Leo. I happen to be a Leo, or whatever their sign is. I don't do. I've always steered away from that. I don't know if it goes back to my old Christian being trained by the Jesuits and being afraid of that kind of stuff with false gods or whatever, but I just never did it. All I did was stick to the numbers. That's what Dr. Miller told me to do, and Jim Twentyman, who was still one of my best friends and my partner at the time, his specialty was numbers, and that's what we tried to focus on. And when we're talking about that, I don't know if you folks watch any TV at not. I love to watch the educational channel, A&E, and then also the History Channel. But actually on the CNN last night, they had a special from NASA on the planet Mercury making a transit. It won't make another transit across the sun like this for another 25 years. It doesn't do it very often, but they showed the video of it, and you wouldn't believe this little tiny black dot, which was Mercury, traveling at 167,000 kilometers per hour going across the face of the sun. It was really, really spectacular. I'm sure if you go in and Google it, you'll find that same picture, because it came from NASA, but it shows Mercury transiting back and forth across the sun. And it's really a spectacular video to see that. And unfortunately, there was not a little man riding on Mercury that was listening or raising signs that said buy or sell, but maybe that was on the back side of it. So we'll see how it is. Yes, Duffy, you're right. It shows how big the sun really is when you see that little tiny dot, which is Mercury. I mean, it's really something spectacular. How all this stuff works together is certainly amazing. But as Albert Einstein said, before God was numbers. So we'll see if that's going to be the case. The thing that we have, let's see what the markets are doing now. Oh, we're opening now. Let's see. We got the Dow up about 100. We've got the S&P up 8. The Nasdaq's up 15. We've got gold is actually gold's only down $1.60 right now. Silver's up a couple cents. And crude oil has actually come back to be up a little bit, but I still think the crude oil has a chance to make that $42 per barrel level. We talked a little bit about that yesterday, because there's a double ABCD pattern there in the crude oil at the 42 level. That's very similar to that pattern that we saw in the gold at the potential of the 1260 level. So those are just some that we're keeping an eye on. The Treasury bonds are having a little bit of a bounce up against this Fibonacci number at the 166 level. We got to 165.30. So all of those are just in the same thing. We're pretty much in a really quiet mode early this morning, but that doesn't mean it can't change. I mentioned when I first came on the show here, this rally really started because we were down overnight for a little while, and then just as soon as the market opened in Japan, after being down, I think 10 out of 11 days, it started strong and got to be up about 2.5% to 3%, which was certainly called for, because it's been under such great pressure, over the past 6 or 8 weeks. It's just been a straight down move in the Nikkei. So you want to keep an eye on that. That's for sure. Anyway, we'll see how the rest of this works out for the rest of the day. Remember, we do have a major grain crop report today. That's at 10 o'clock. I would urge you to listen to Andy's program here at TFNN, to get the feedback on that as you go through it. But I wouldn't touch that anything until after the report is out, because it's just like a farm non-farm payroll, folks. They have the same emotionalism in that grain markets as they do in the financials, so they'll be extended to the downside. But we've looked at some really nice patterns in here. In the corn, about 10 cents lower in corn is going to complete a beautiful ABCD pattern. And in the wheat, it could get down as low as the 445 level. That's about 13 cents from where we are right now, because we're trading at the 457 level. But the grains have their seasonal period starts about now, because we've got corn is pretty much planted, I'd say about 80% probably, and beans won't be far behind. So all of that will mean that we'll start to have some crazy weather coming in. And if you don't think we're not having crazy weather, folks, just look at that fire that they had up in Canada. It was bigger than New York, and it was bigger than Hong Kong too. That's how many acres that it took. But these are things that make the markets move, or some of these weather events like forest fires and volcanoes, because they affect the atmosphere, and that affects the moisture, and that affects the crop. So that's the bottom line. On the someone all right, let's get to the nitty-gritty here. The most important thing that I see happening today from a technical basis is the fact that we're making our second ABCD pattern in gold. The first one went from 1286 to 1212. It dropped $70, 2 times 34. That was way back in March. And now what we're looking at is a second ABCD pattern that came down here to this 1261. Whether it's going to hold 1261, I don't know, but at this point, it's better to buy it $30 cheaper than to buy it at $1,300. That's the way it looks to me. So if you like gold, this is the place where you want to take a look at it. That's that's the bottom line. It's an ABCD pattern, and Gartley spent 2 full pages in that book describing how to buy an ABCD pattern, and that was the Gartley pattern. So keep an eye on it. It's going to be interesting, as it always is. Okay. One of the questions someone's asked was about the chart of Apple. We've posted this several times. I don't have access to it right now, but I'll try to have it tomorrow. Apple has a really strong targets at $85 a share and $78 a share. The $78 a share are the expansions of the ABCD swings because of the gaps that we've had down. That market means the market will usually go beyond the regular ABCD that comes in at 85, and so the expansions would take you down to about 78. Believe me, when you get down to about somewhere below 90, 89, these folks that have been in this stuff since 130 are going to be looking around and checking their whole card to see if this is going to stop going down forever. So we'll wait and see. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I've posted into Tiger TV the chart of Apple, the weekly chart. You can see the big blue lines, the thunderbolt lines. Those are the ABCD patterns. They both measure into the high 70s, somewhere between $79 and $76 a share. And so that's where I believe that we're heading towards in Apple. If you'll notice the recent week's action that we're up to date, it's trading around 92.40 right now. We're almost ready to take out that other low that we made back earlier in the year. And when we take that out, that will set up the ABCD down to this little bit below $80 a share. And the fact that we're coming down so quickly in the Apple over these last couple of weeks, that certainly gives it more weight that's usually what's going to happen. Because whenever you see these really wide-ranging bars like we had 2 weeks ago in the Apple, that usually means there's more selling. The same thing on the upside is if you see that on the upside, you're most likely you're going to extend beyond your normal target by either 1.27 and 1.618. So we'll notice how that happens as it unfolds, and we've got some time because that's still $15 away, from where we are. But that stock can move really fast. So all we have to have is a little tiny bad news. And if you stop and think what's happened to Apple, since last year in January, it had news every single day about the greatest company in the world. And at that time, and it might still be the greatest company, but I think it looks like Amazon has taken over as the greatest company in the world. I know it's the easiest company to shop with, that's for sure. But these things change. It's one of these days Facebook is probably going to be out of favor. So just be prepared and watch the charts, and they'll give you a pretty good idea of who the buyers and sellers are. Because remember, that's the only thing you have to go on. All the news that you hear is usually going to be interesting because it's not always true, of course. But the only thing that you have to work on as a technician is if there's more buying, prices are going up, and if there's more selling, the prices are going down. That's what you really need to do, and sort of watch that as your guideline. They certainly can't hide from you. They can give you misinformation, but they're not able to hide because the price charts are right there. I want to get back to the grains for just a second because we have an unusual situation in the complex. We have corn and wheat under a great deal of pressure, and yet we have the soybean complex still holding up incredibly well. They're closer to the highs of a breakout than they are on the downside. That's partially due to the drought that they're having in India, because India is a big producer of oils, and soybean oil is one of the oils that they use as, of course, for cooking oil, which is part of the soybean plant. So that's part of the reasoning, behind what we're looking at that point. So that's the main thing to come on. Now the wheat report comes out at 10 o'clock Central Time. That's about a half hour after the old opening used to be, and this has been a real change here, because years ago they didn't have these reports until after the markets closed. But now what they do, because of the expanded limits in electronic trading, they just bring it out, right during the part of the trading day. So that's always something to think about. I can remember a very interesting situation that happened on the Merck floor way back in, it's 82 or 83. Harry the Hat Lawrence was he was the largest paper filler on the floor. He was a floor broker. He filled all the paper that you folks sent your orders in on. And he had a huge deck. He and his brother and other people, just a huge organization, and they were fabulous at what they could do. But whenever there was a hog report, he would be in the hog pit, hogs and bellies, either buying or selling like crazy. And those of the people that are on the floor that knew who Harry the Hat was knew that he was actually filling orders for someone up in the government. So when he was buying, you could almost bet that hog report or belly report was going to be bullish. And it was an old foregone conclusion. When Harry was in the pit, you better watch what he was doing, because he was there to put orders in for somebody who had an idea of what the report was going to be like. And if anybody can guess the name of that man, I'm going to tell you. And it was Clarence Beeks. If you remember Clarence Beeks, the guy that had the orange crop report in Trading Places, that's who it was. Actually, it was Secretary of the Treasurer, I can't remember his name, Earl Butz. Yeah, it was Earl Butz. He was the one that they were doing the buying for, supposedly, but it was never proven. And I doubt if politicians would do anything like that, try to make money off of something. What a weird thing to even say. All right, we'll get back to the markets here. We got a few more minutes to go here in the program. We'll double check. We still got stocks are acting pretty good. Gold is still weak. The bonds are holding their own. The currencies are doing very, very little today. Crude oil is having a minor rally of about 50 cents a barrel, but that's really not too much. So we'll sort of keep an eye on what's going to happen with that. Remember, should gold break below this 1260 level, the next level of support is the 61% retracement of this whole move from the 1212 level. That brings it in at 1255, 1254 level, which is certainly another area of support. So this is what where we're watching so far today. And also, I want to remind you that we are going to have Al Larson on tomorrow as our guest at 9:30. You don't want to miss that, because he's a really smart guy and always has some great information. And we'll keep that in mind as we go through the day. All right, we have another question about the price of Amazon. Folks, Amazon has gone beyond the 680 per share level. That was the 1.618 expansion of the last move. And anytime a stock does that, it's in no man's land, in my opinion, because we have no other extensions to look at. I mean, I don't go past 1.618, because you can go to 2.618 or 3.4 or whatever, but those numbers are so ridiculous that, it's just really not. It's just not worth playing. What you want to do, if you want to buy that stock, watch it on a short-term basis, and watch it when it makes a, $4 or $5 correction. Then you'll see that makes these corrections intraday. That's where you want to be looking, to be a buyer of it. Buying breakouts, I know they work some of the time, but they don't work very well. At least from the point of view that I'm watching. So we're getting very close to the 61% retracement now in the S&P, up here at this 2074 level. And so keep a very close eye on that, because that could be an area where it might have a little bit of slowing potential, because that's going to be some pretty good resistance, I would think, because we had a beautiful pattern down there at 2030 last Friday, and now we are 40 handles up from there. So that's been one heck of a move, and it's probably getting a little bit tired here pretty soon. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and one of our listeners has asked me if I would rank these patterns that I put in here: silver, gold, wheat, corn. Not a chance. That means the responsibility would be on me, and I don't need that. I'm just trying to give you some ideas of what we're looking at here. So that's the main thing to keep in mind here, that you have to take the responsibility. I'm showing you the patterns. You have to go back and look at it and make sure that it's what you think it is, because what I see may not be what you see. And so you've got to be able to rectify that. One of the things you need to do if you want to learn to be successful in this is you got to, determine, what it's going to take, to be right. And remember, there's no mistake in guessing wrong. The mistake is in being wrong. So when you make the first mistake, that's the bad trade. The second mistake is you don't do anything about it. And that's what you really have to focus on, is the losers that you have. You focus on your losers, you're going to be far better off. The winners are going to come, and they usually come from way out of the blue somewhere. But anyway, that's what you really have to do, is have that belief system that what you're doing over a long period of time is going to be working. And believe me, that is not an easy task. Mark Douglas always said, trading is simple, but it's not easy. And that's what you have to try to figure out yourself. And you've got to do it yourself. People can give you some ideas. They can guide you along the way. But until you do it yourself and see that you're able to do it, it don't mean diddly squat, folks. I can promise you that. You're the one that's got to do it. And the main thing is, we got some really smart people here on TFNN. I could go through all of them, but they're there. You got Basil, Steve Rhodes, Andy. Oh gosh, now I'm gonna forget. I'll forget everybody, I'm sure. But anyway, the main thing is they're out, and our good friend John Logan, the traveling trader. But if you do it yourself, then you've really got something. But if you rely on somebody else, it's not worth it. That's why Twentyman always said, defy human nature. Do the work yourself. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.